I myself am Steve Waddell. I'm a couple of hours west of Boston. I lead the Next Economy's Innovation Working Group. I invite you to where we've got a subgroup particularly on financing and how to transform the financing paradigm that involves both philanthropist financing and other type of financing to really provide the scale and the ease of access to systems change finance. So thank you so much for joining us today. I would like to, first of all, introduce you to Tomas Carruthers. Thomas, welcome to today.
Thank you, Steve.
I just want to thank you for all of the work you've been doing to develop what we're calling the social stock exchange. And maybe you could just give us a little bit of a background about yourself and how you got involved in such an audacious project as the social stock exchange.
Thank you. Well, I'm an entrepreneur by background, and my first company as an entrepreneur was a company called Electronic Share Information in 1994, straight out of university, because I got interested in playing with the internet. It was just before the World Wide Web was created by Tim Berners-Lee, and I thought that it would be interesting to publish share prices and research on the internet. My father was a financial journalist, so I'd sort of grown up with finance and with the stock market, I think a bit like Giroux, actually. So I thought the obvious application of the internet was to publish share prices and research. And in fact, I've done a TED talk about it. So rather than boring everyone here, you can go and look at my TED talk and hear how I started the first company in the world to publish share prices and then to do online trading. So that was how I got into this. And I traded that company through 2008 and was very struck by the financial crisis and the impact it had on, of course, the most disadvantaged. And I think that was kind of my road to Damascus moment, because I'd been a philanthropist. I've been lucky enough to float a company and made money, but I'd been a philanthropist. And it just became incredibly clear in 2008-9 to me that philanthropy and government intervention weren't enough, that we needed to change what we were doing fundamentally. And that's when I got very interested in this new concept of systems change and impact investing. And that's how we get to today. Public listed equity and public listed fixed income are the two largest asset classes in the world. It's simply impossible to imagine how much money there is invested in public listed fixed income and public equities. If only we could create the intermediaries that could move some of that capital towards the achievement of the Sustainable Development Goals by financing social entrepreneurship, especially in the Global South, then we could make, I think, a transformative difference to the world. And that's why I was so excited to join Catalyst 2030. And that's really the project of a social stock exchange, that we can make something possible globally through social entrepreneurship, all the members of Catalyst, being properly financed to achieve their objectives and their visions and their purposes.
So you've introduced these terms, public equity and public fixed income. So you automatically think, oh, well, then there's private equity and private fixed income. But those concepts might not be well known to everyone who's here with us today. So can you explain what you mean when you refer to those public and private forms of equity and fixed income?
Yes, I can. I'm also conscious that finance turns a lot of people off. So I don't want to make it the kind of subject which turns people off. We think that people should be excited about getting access to public capital, but sure. Part of the concept of the social stock exchange is inevitably a critique of what's gone before, like all new projects. And the social stock exchange is a critique of the, I think, fairly unreflective use of private equity and private credit as the financing instruments of choice for impact investing, the concept that's now, I think, about 10 years old, alongside the creation of the social impact bond, which I'm not going to talk about here, but I'm happy to talk about offline. Private equity is really misnamed. Private equity is actually better known by its original name in the 1970s, which is leveraged equity. The idea of private equity is to generate returns by borrowing money to capitalize businesses, what's called gearing or leverage in the financial term of art. And most of the returns generated by so-called leveraged equity aren't attributable to equity at all. They're attributable to debt, which gets paid out when the company is sold. And companies get sold all the time because the debt has to be paid off. So the average hold time for private equity investment is about 3 years, 3 to 4 years. There are extensions to that, but the average hold time is about 3 to 4 years. And the reason for that is that the fund's life is normally 5 years. So think about that in the context of social entrepreneurship. We talk about long-term patient capital. Well, 36 months hold time isn't long-term or patient. We talk about prioritizing purpose and vision over short-term profit. Well, you can't do that if you're highly leveraged because you have to pay your interest and your debt. And thirdly, we talk about relying on the vision of the social entrepreneur to catalyze change. Well, the social entrepreneur has just been deeply subordinated because the social entrepreneur owns common stock, ordinary stock, and they've just been deeply subordinated by the private equity investor. So for a number of reasons, but we can start with those three, I actually don't think that leveraged equity is the correct way to finance social entrepreneurship. I think the correct way to finance social entrepreneurship is through the public market, where investors hold exactly the same class of security as the social entrepreneur who is leading the change. And that's equitable. And it gives the social entrepreneur the capital they actually need, which is invested in their vision and is aligned with their vision, and of course is patient.
Great. Well, let me just summarize what the difference is here in my, as you've explained then. So we've got private equity, which is usually high net worth individuals who are investing in sort of a Silicon Valley model. They put in money for, you were describing, 3-year focus. They're totally focused on financial returns, and they therefore have very narrow range of projects and activities that they actually invest in. Moreover, they are in control positions. It's not a collaboration so much as being in control. I just want to see, Tomas, whether you would agree with that summary.
Yeah, I do agree with that summary, and you can see what happens if you choose private credit and leveraged equity as your financial tools of choice. Because look at all of the money which is flooding into carbon capture and storage. Billions of dollars has been invested in carbon capture and storage, which is a set of technologies that have basically no working examples. It literally doesn't work as a strategic solution to maintaining the Paris Accord and keeping the increase in the ambient temperature of the world below 1.5 degrees centigrade. But because it's highly investable if you're a private equity investor, it attracts billions of dollars. Whereas the things that we know could work and do work, social entrepreneurship in communities, the kind of thing which Catalyst was founded to support, don't attract capital. And it's because they're not attractive to the providers of leveraged equity. So what we need to do is start using the tools that will work to draw capital towards social entrepreneurship. And I firmly believe that's the public market. It's not high net worth individuals, it's everybody. It's called a public market for the reason that the general public can participate. They can believe what the entrepreneur is saying, and they can buy the stock, and they can support their mission.
So we have large public markets already. We have the New York Stock Exchange and other stock exchanges. So why do we need to have a social stock exchange? What is your driving vision here about the distinction?
So that's true. There are more than 150 stock exchanges in the world. Actually, there are, I think there are 17 stock exchanges just in the United States of America. Most countries have at least 2, like India with the Bombay Stock Exchange and the National Stock Exchange of India. UK is odd in only having 1. So yes, it would appear that the public markets are well served by existing platforms, but none of those platforms are focused on the social finance that we firmly believe the public markets need to intermediate. And so we think there is a need for a new platform, which will be the dedicated intermediary for financing pro-social businesses around the world. And to that end, obviously, you know this, Steve, because we talked about it in the Working Group 11 meetings, we will be the only stock exchange in the world that requires our issuers, the people raising money on the exchange, to be able to articulate and publish a theory of change. And of course, we will also publish our own theory of change, which some of the participants on this call helped to develop. So So we think that there is a gap, and we think that there's a way for us to distinguish ourselves by serving this very specific requirement of funding social entrepreneurship. More than that, I think it's clear that we can improve the ways that social entrepreneurship gets access to finance on a public market. The listing rules can be incredibly onerous because they're actually designed for much larger companies than classically come forward in the social entrepreneurship world. This market needs to work for businesses that are worth £10 million or £20 million, not billions and billions, not businesses exiting from a private equity structure, but earlier stage businesses. And so our cost base will reflect that. It'll be accessible. And I think that's something that's also worth emphasizing.
Thank you. I'd like to bring Naga into the conversation. Naga, welcome. You're in India right now, no? Naga? Whoops.
I can't see him.
I think we may have lost Naga.
Ah, okay. Well, let me bring Jeru into the conversation then. Jeru, maybe you could just give people a bit of your own background in the investment world. I think most people will be surprised to hear that you are very familiar with markets, that as Tomas is talking about them. Can you give a bit of a description of what your experience is?
Yes, so
whoops. We seem to have a frozen Jeru. Okay, let's go back to Tomas for a moment then. So Tomas, you've been working since 2008 on this stock exchange idea. Maybe you could give us a bit of an idea of examples of sort of what you see that you're going to be funding that other people aren't funding, and why it's going to be different.
Yes, of course. And hopefully Drew can join us very shortly. So the concept of the social stock exchange isn't particularly new. It comes out of that period post the financial crisis in 2008, which in some sense we're still living through the consequences of. Global austerity policies have afflicted everyone. And there were examples of social stock exchanges projects in Singapore, IIX Asia, in Canada, Social Venture Exchange based in Toronto, Ontario. There was a project for some time in South Africa, in Johannesburg. And I was co-opted by the UK government, supported by the British Council and Big Society Capital, to build a social stock exchange in the UK, which operated for 5 years between 2013 and 2017, raised about £500 million for all sorts of different sorts of businesses. And then unfortunately was a victim of Brexit when the civil society unit of the Cabinet Office was closed down. But that was really the proving ground for today's concept. And so maybe I can give you some real life examples of the sorts of businesses that were financed. Social housing and affordable housing was a big focus. We financed 3 businesses that were in the social housing sector. No surprises there. There's a housing crisis in the UK, but UK is not unique in that respect. So building and operating affordable housing is a key social achievement, and we were very happy to put money towards it. Secondly, we financed renewable energy businesses. Affordable energy is also a base case social good for maintaining households. And so renewable energy is unusual in that it doesn't normally come to the market. It normally is financed through debt. But we financed some renewable energy businesses. Access to healthcare and clinical care, including businesses in Kenya and Tanzania and Ghana, as well as in the UK. So healthcare, again, women's healthcare. I think, again, an unqualified good. Clean water, so water purification businesses and the provision of clean water, potable water. We finance a business doing that. Education. So I think that gives you a sense. It's quite a wide range, but we required all these businesses to be able to articulate a theory of change, to be able to publish their impact, and to to be publicly accountable for being purpose-driven. We don't want businesses that are doing this for what's called, greenwashing to kind of do brand development. We want businesses where the board and the chief executive are purposely operating a business model for the advantage of their stakeholders, their beneficiary group. So we would decline businesses that were actually highly profitable, but were clearly just pretending to be socially motivated businesses for the benefit of branding, which I think, again, makes us quite unusual as a stock exchange. So we've had real life experience of doing this for 5 years. We've also looked to examples elsewhere. And of course, we're very keen to encourage the creation of other social stock exchanges. For example, the amazing work NAGA's been doing in India. And to that end, we've said that we'll share for free the kinds of intellectual property that we've generated, including, of course, our theory of systems change.
Wonderful. I think we have Jeru back with us. So let's turn to her again and bring her into the conversation. Sorry
about that. Sorry.
So we were suggesting you could share something about your background yourself in the finance world.
Yes, I don't know where I got cut off. So
you didn't say a word. We are waiting.
So I was talking away to myself. Sorry. Oh my God. Okay. No, I just said that Thomas had mentioned the Bombay Stock Exchange. My family had been involved with the Bombay Stock Exchange. Like you, Thomas, my father traded quite a bit on the stock exchange, and he thought he was a strong feminist. So he insisted that I, as a girl, which is not very common in India, know everything about stocks and stock prices and how the exchange ran. And so that was something. And for very long, and till I got married and I couldn't do it because my husband's with PricewaterhouseCoopers, I sort of made a living trading the stock exchange and doing social work. So it was very, very interesting. I could finance both. And I firmly believe that the stock exchange, so that's personally, but I firmly believe that the stock exchange really is the place where people can get together. Initially, it used to be much more for the elite. But now more and more there are people who invest. Unfortunately, people have lost a lot of money also. Let's not forget that. So when Thomas talked about the stock exchange, I actually said having a social stock exchange is fantastic, but maybe we need to go a step further, which is we have the financial valuation, but can we also have a social valuation? So an impact valuation, which starts getting placed on the stock exchange. So we are able to, and we work towards creating impact measurement on a stock exchange. So you talked about a social housing company. And if there are 4 social housing companies, I'm just saying it hypothetically, listed on the stock exchange, I, as an investor, want to invest, but I don't know which one to invest in, then I would see which one, in addition to do social housing, I was speaking to someone yesterday on this, is also looking at mental health in the community, is also looking at community resilience, so what happens is that you will have some common parameters by sector, etc., but then you will have the value add social parameters, which will help the investor decide in equal equity classes, where should they invest? Should I invest in company A because I really think mental health is the key issue and therefore I want to do that? Or no, I just want to have maximum return, so I'm not going to in the social space. So I think what's really interesting for me in the social stock exchange is the fact that there is going to be a theory of change which governs the company getting on, but then that we are able to actually start in some way, if not immediately when Thomas launches, soon after having an impact price. And if we succeed in Thomas's impact stock price, can you imagine? Because we can then start revolutionizing the whole financial sector, because we can start taking impact prices as we have them, or impact valuations. I'm just calling them impact valuations. You know, you talk of stock valuations, we have impact valuations. And then why can't I have an impact valuation for a Fortune 500 listed company and make them do it and then have someone check it? So then what's happening is we are really shifting the whole economy and bringing about a change, which is which will start making the whole transformation that we see happening. So I see Thomas's Stock Exchange as step one, where we work, we have proof of concept, we try it in other social stock exchanges, and then we are able to take it on towards transforming or actually revolutionizing stock exchanges across the world, because you start creating impact valuations. Sorry if I took a bit longer, but that's the whole vision that we have to see.
That's great. So the immediate question for many people is, well, we already have impact evaluation. We have ESG evaluation. This is lots of evaluation that's happening. Why are you unhappy with what's already happening?
I think everything that's happening is very good. Has it been put onto a stock exchange? Have they been compared next to each other? Have they been traded? No, that's not happening. So that's what's uniquely different. Many impact valuations which are there are not looking at environment factors. They are not looking at all the externalities. So when we start looking at it, we need to get in some of the experts who are looking at externalities and start looking at that also. But the most important is we have impact valuations, but we don't have them traded on any sort of exchange. And I think when you start trading impact valuations is when you will start leveraging the transformation. Otherwise, it remains within a small echo chamber. Ask the person on the street, do they know about all the impact valuations? Ask the average investor. No, they don't.
So let's turn back to Tomas for a moment to get your view on this. Giroux is advancing this idea of impact evaluation. We have lots of evaluations that are being compared across stock exchanges already, like ESG. What's missing in ESG type evaluation?
Well, the S. The S is what's missing. So there's tons of measurement for environmental impact. Most stock exchanges in the world are adopting something called TCFD, which is climate-related financial disclosures, including the London Stock Exchange, Bombay Stock Exchange, Singapore Stock Exchange have already adopted TCFD reporting and will make it mandatory for their issuers. Coming down the track over the next 4 to 5 years is something called TNFD, nature-related or biodiversity financial disclosures, and that will also be adopted by most stock exchanges. But the S is what's missing. The social is the element. And to give you an example of why you do need something like what Drew is describing, there was a very good article in Business Week in December of last year in which the reporter criticized, basically exposed a company called MSCI, which is a very important company in the world of ESG reporting, by showing that their data, the ratings that they supply for listed companies are not measuring the impact of the company on the environment and the society in which it operates its businesses. What they're measuring is the reverse of that, which is what is the risk to the company's current business of adverse changes in the environment and the society where it operates its business. In other words, MSCI is reporting on the opposite thing to the thing we want to know, which is whether the business is doing good in the world. It's reporting for the advantage of shareholders on whether or not, for example, civil disorder or degradation of the local climate or the environment will prevent the business making the kinds of profits it's forecasting. So that's an example of why you need a new model. We need a model that's going to measure what we care about, which is whether the business is making a positive impact. And I think that that's something that Giroux is completely right about, and something that would be different from what's available now.
Wonderful. Then Giroux, let's turn to the Catalyst 2030 mission. One of the core focus of Catalyst 2030 is about collaboration. It's bringing together social entrepreneurs because individually they have much to gain by working collaboratively with each other. So some people would say, well, one social entrepreneur isn't going to have enough impact, or in many cases won't have enough impact. Do you see the social stock exchange? How do you see it playing out in this sort of broader scenario about supporting collaboration, or how do we address the financing need around collaboration amongst social entrepreneurs too?
Great question, and I'll sort of break it up into parts, if that's okay, my response. The first part is the power of the collaborative. Mm-hmm. I don't know enough. Thomas doesn't know enough. You don't know enough. And none of us know enough in our own. But when we come together, then we can create something which is much bigger than what we can individually, you know? So I think, and Thomas mentioned it earlier in his call, I am totally like sold on the social stock exchange. But when he was developing the theory of change bit of it, many of you all in your working group contributed to make that happen. Now, when he's looking at the second part, so it was the power of the collective, which sort of enhanced Thomas's passion. I'm just putting it that way. So we all work together. So I think the collective works towards strengthening, making ideas better. That's the first one. The second is the whole part of Catalyst, which is about the collective power leading to systems change. So if Thomas talks about a stock exchange, then maybe someone else picks it up. I just see Manoj on my screen. Okay. Manoj picks it up and takes it in the US. Maybe someone else, I just see 3 names on my screen here just now. Jen picks it up and she takes it. Where are you from, Jen? I don't know. Takes it there. So you have different people taking it to different parts of the world, and therefore the concept of the social exchange gets more strengthened. And then we start looking at it. And when the social stock exchanges start showing different things, so example, when we have a pricing and evaluation which is happening on the stock price, we start influencing commercial stock exchanges, because people who are coming to the social stock exchange are going to ask for a shift in the commercial stock exchange. So what we are doing is collectively and in a very strategic way, we are able to transform the system. And by transforming the system, just taking one thing on financial and stock exchanges, we're actually transforming the economic system. And that's how we can actually shift how business is done. So it's the power of the collective, just 3 words.
Thank you so much. Tomas, we're talking then about providing money for good investments that will have impact, social impact. And that's one role of the social stock exchange. The other role that Giroux is talking about is aiming to revolutionize or transform and influence the broader financial system. And I'm wondering how these two fit within your theory of change, because indeed, you're not only asking each listing on your social stock exchange to have a theory of change as a measurement about success. It's also, and the impact that Giroux is bringing up, the impact measures, but you're also involved in the bigger financial field. So I'm wondering how it fits within your theory of change for the social stock exchange, these two different activities.
Yes, great question. And thank you, Giroux. So if I could just step back in order to step forward, I said at the beginning of this talk that the concept of a social stock exchange or a network of social stock exchanges embodies a critique of impact investing as it's been practiced over the last 10 years, using private credit and leveraged equity. I also think that it should embody a critique of the concept of entrepreneurship as it's been fairly unreflectively imported from Silicon Valley. We know that what motivates social entrepreneurs, in fact, on this call, yourselves, what motivates people to social entrepreneurship is not remotely the same thing that motivates people to found software companies in Silicon Valley, i.e. a complete focus on personal enrichment. That's not what motivates people to do social entrepreneurship. I think we need a better, richer account of what motivates social entrepreneurship and what motivates the people to create the kinds of businesses that they create. Because I don't think actually we would find that what motivates people to social entrepreneurship is at all the same thing that motivates people to try and make lots of money in Silicon Valley. And we need to actually tell those stories and show that the way that companies are formed is different because the motives of the founders are different, because they're focused on achieving a benefit for their stakeholders. And I don't think we do enough to tell that story. Supposing that we did, I think you'd see that actually the collaboration in a social exchange is sufficient to change the financial system, because it would be a really powerful account of new business creation globally, but especially in the global south, in order to use what business is good at to create sustainable communities and to protect the environment and the natural capital that they depend on. So I think we should actually go right back to the beginning and have a better account of social entrepreneurship. And then, of course, social entrepreneurs, of course, what we do is we don't compete, we collaborate, we share, and through sharing, as Drew said, we can become more powerful, not less. And that way, the exchange can act as a multiplication, as a multiplier for social entrepreneurs coming together to change not just the systems that they're focused on in their own theory of change, but of course, we have a theory of change too, to change the financial system in favor of allocating more capital towards social entrepreneurship, and in that way towards achieving the sustainable development goals.
Wonderful. So from a systems change perspective, this is an extremely high leverage point potential for the economy. Let's turn to some of the questions that we're getting in the chat here. We have one from Azadeh. Azadeh, do you want to turn on your mic and actually pose the question that you had here, that you put in the chat earlier? Okay, let me read it out. How does the public's risk perception and pro-social risk-taking ensure that social enterprises can access finance and also succeed?
The old idea is that the social entrepreneurs focus on achieving an advantage for their beneficiary group means that they're not really focused on running a successful business, and therefore they can't raise money by investment. They have to rely on grants. I think everybody on this call knows that's 100% wrong. In fact, some of the social entrepreneurs that I've met are working in very tough conditions and are very good business people because they have to be in order to operate a business in those conditions, and effectively have been starved of capital by this perception that they're somehow charity cases. So that's the tension. I think part of the answer to Azadeh's question is in what Drew and I said before, which is, if we tell better stories about how social entrepreneurs are changing the world, then people will see that they're very serious people who are running serious businesses, and these businesses deserve to be capitalized. But we're not the poor relations of the Silicon Valley private equity model. We need to tell better stories about ourselves and about the financial systems that we need in order to make social entrepreneurship work as a systems change. And if we did that, then you would see that tension dissolve, I think, because people would see that it's not inconsistent to be completely focused on achieving a social advantage for the disadvantaged and to run a good business effectively.
Mm-hmm. Thank you. Jeroen, do you want to add anything? Okay, well, let's move on to Adam Wasserman's question. He's finding this conversation fascinating. Would the social stock exchange only fund for-profit companies, or is there a way to somehow list nonprofits as well? So it gets into how you treat financial return, I guess.
It does, but it also gets into who can sell shares. So yes, is the answer. We can list nonprofits because they can issue bonds. So in the past, I have financed housing associations, I have financed hospitals, I have financed charitable undertakings because they can issue a debt security. So yes, nonprofits can absolutely use the social exchange, provided that they can produce and articulate a theory of change that their board is prepared to live by and demonstrate in a measurable way the advantages which they are achieving through the operation of their business for the disadvantaged, for their stakeholders, for their beneficiary group. I don't know, Drew, if you'd like to comment.
That gets on to Manoj's question, which is, will actual performance be tracked versus the theory of change? And if so, at what frequency? So how do people come up with their theory of change, or how do they express it in a way that the stock market will be able to incorporate it into prospectus, etc.? So
there was quite a lot of conversation a few years ago, which basically settled that impact reporting, as it's called, has to happen with exactly the same frequency as financial reporting, so that, if you like, what used to be called the non-financial data, of course, we know it's not non-financial. There's no such thing as non-financial data. It's all financial because it's all about reward and risk. So that the impact data is updated at the same currency as the financial data. Otherwise, what you're going to have is the thing that's driving the share price being the financials, like a conventional stock exchange, and not the impact. So that's very important. Our reporting cycle, therefore, would be annual, but there've been a lot of innovations, including in the COVID period, in impact reporting, and so we would hope that we could make the kind of data that's being reported by companies proving that their theory of change is working much more frequent. I mean, there's a Catalyst member, I don't know if they're on this call, but there's a Catalyst member called True Footprint, which has been doing effectively real-time impact reporting. Wouldn't that be brilliant? And that would actually be a way of making sure that the thing that's driving the valuation of the enterprise is the impact part of the story.
Wonderful. So we have a question from Nashid Kumar in Mumbai. Nashid, would you like to pose your question directly?
Yes. So in India, we have a very large group of nonprofits. And of course, there are social entrepreneurs. There are social entrepreneurs where ownership is partly held by the community and partly held by individuals who founded it. My question is, will the social stock exchange create a criteria for understanding that difference? If there is a enterprise that creates a product using community and plows back some of the profits into that community, then that has a greater impact. If on the other hand, the community is benefited because it is being used for labor or it is being given a job, then it's no different from another for-profit company which does the same thing. So will there be a criteria to differentiate such kind of social enterprises?
Yes. So what you described is a perfect example of a community business where the stakeholder group, the beneficiaries, are themselves shareholders in the undertaking. So that's exactly the sort of undertaking that we would want to be able to support. Okay, because there is a perception in India currently, because of the proposed stock exchange, that it will largely benefit social enterprises who are selling products and services utilizing a workforce from amongst the community, but they're not necessarily held in terms of stocks by the community. So this perception is very widespread currently, and therefore there is some cynicism about the proposed stock exchange in India. Well, and I speak as a stockbroker here. It's always dangerous when the world of finance crashes against the world of community solidarity, because it tends to be the world of finance that ends up profiting and not the world of the community and the society. So that's again a reason why we think we need to have a social stock exchange which sets out that it values social capital and respects it, rather than trying to be parasitic on it, which I think unfortunately in many cases is what happens, even with some well-intentioned ventures. So I understand the grounds of cynicism, and I'm afraid it's not just an Indian problem. but we do think that by being explicit about how the beneficiary group, the stakeholders, are themselves participants in the enterprise that's raising money, they can secure their position, including their economic position, and make sure that they also preserve value in the thing that they have built and that are building, sure, rather than being extracted by somebody else. Well, I certainly hope that that's exactly the view that will happen in India eventually. So that's all I can say at this point of time. Thank you. Well, I've had conversations with Naga, who I'd hoped was going to be able to join us, about this very issue in India, about making sure that things like agricultural cooperatives are not taken advantage of.
Thank you so
Great.
much.
Thank you.
I'd like to move to Tanuja Prasad. Tanuja, you also had a question for the panel here, Jeru and Tomas. Maybe you could come and pose it live on mic.
Yes, sure. Thank you, Steve. Hello, Tomas. Hello, Jeru. Thanks for the session today. So mine is a systemic question. You know, we live in a connected world. So how would the social stock exchange coming into the economic ecosystem, how would it make it less extractive? That's really the essence of my question, because private equity is pure extraction.
Yeah, great question, Tanuja. Nice to see you on this call. Well, I mean, we could do another hour on just the critique of I think, probably a 30-year-old paradigm of new company formation, of what motivates entrepreneurship, of private credit and private equity financing, because that's kind of what you have to do to understand that we've all been sold a bill of goods, and that actually what motivates social entrepreneurship is totally different from what motivates people in that private equity funded model. You want to know why it's less extractive? I mean, we have this argument all the time about whether social enterprises are only fundable through grants in aid or government or development banks or philanthropy. And the reason we have that debate is because the alternative appears to be only the kinds of target rates of return achievable by private equity-backed businesses. You know, okay, so that would be about 18 to 24% interest rate on private credit, with the first fixed and floating charge on the business's intellectual property and brand. Or, you know, it would be the kind of private equity driver, which is between 2.5 and 3.5 times uplift on the valuation of equity within 36 months, normally achieved, as I said earlier, through gearing. There's absolutely no reason to believe that on a public market, any public market, the New York Stock Exchange, the London Stock Exchange, the Bombay Stock Exchange, that's the kind of rate of return that suppliers of capital would seek. And on the social stock exchange, there's no perspective that would be the market clearing rate of return on equity. It's absurd, and I think it's one of the issues with impact investing. It's absurd to think that social entrepreneurs are supposed to generate that kind of return in order to justify getting access to capital. I obviously don't know what the market rate of return is going to be on the social exchange because we're not live yet, but it's not going to have to try and meet the kind of expectations achieved by private equity investors, partly because, as I said, most of that return is generated by borrowing. And the last thing in the world I want to see is social entrepreneurs operating in difficult situations, starved of capital, all of a sudden becoming, you know, profoundly indebted and subordinated.
Yeah, benchmarking against current market rate of returns, it doesn't make sense when those returns are really like drug dealers, you know, at the cost of everything else.
And also those returns are extractive, right? They're based on
exactly.
They're based on businesses which are imposing what we used to call Pareto externalities. In other words, they're consuming social solidarity and social capital. They're consuming in the environment and natural capital. It's completely unsustainable from the perspective of the world that these sorts of returns are being generated in the short term. So
yeah, thank you.
I think if the businesses were correctly priced, actually, they wouldn't be worth anything like what they're currently trading at.
Yeah, agreed.
We have time for one last question. I'm going to go to one that Jan Vandermeer posed, which also relates to pricing. It's who decides the social price or contribution? Investor, evaluator, recipient of benefit. So it's about the price determination of the value of a stock or a share.
Great question, Jen. Nice to see you on the call. I mean, I think that in a social stock exchange, the one would hope that the price is driven by the impact data and whether or not the use of a business model to provide advantages to a beneficiary group is working or not. In other words, the most successful interventions are the most valuable. That's what I would hope. Otherwise,
can I ask a clarifying question? Because logic is in the eye of the logician. Like you know, and maybe this is like an imagination space. How would you imagine that the beneficiary's voice would be included in that evaluation?
Well, through holding the board of the company accountable to deliver on its theory of change. But ultimately, one of the attractions of a public market for me is that the beneficiaries can be shareholders, right? They can have a stake in the business. They can be owners. They can benefit from the uplift in the equity's value. They can appoint directors. They can get very much involved in the governance of the business, rather than being. I mean, that's got to be the vision, right? Rather than being sort of operated on remotely, they are very much, you know, involved in the operation of the business, in running the business, in governing the business. That would be the ideal situation.
Thank you so much. So I'd like to wind up by asking Tomas about the next steps. So somebody out here is interested in getting a listing on the stock exchange. What's your timeline for being able to accept listings, and what should they do? Jeroen, did you want to add?
No, Patrick has a question, I thought, before we wind up.
Ah, Patrick?
Yeah, thank you. Thank you, Steve. Thank you, Thomas. Thank you, Jeroen. So I just wanted to say this is a fascinating discussion, and I really love the idea. You know, I mean, I'm a social entrepreneur for many, many years, and, you know, we sell fair trade bananas, fair trade avocados. And with this, you know, we really give everybody the possibility, you know, that the woman and man in the street, that they can actually invest in a social company. So I think that this is one of the big signal effect. But the other one that Jeroen, you mentioned, is it is really, you know, it can create a systems change. You know, that we actually, for the first time, that impact valuation will become visible. And just that fact, you know, for all the multinationals seeing this, you know, will have an effect that goes way, that ripples across the market. And so I think just those two are very significant. And then the question I have is, I mean, I love the idea of, like, you have a financial valuation, you have an impact valuation. And then would then those be sort of combined when somebody wants to buy, somebody wants now to buy a share because they love, you know, organic or fair trade, or they love housing? Would then that be like a combination of those two values that would make up the value, the share price?
Any response, thoughts about that?
I don't know, Jeroen, do you want to comment?
Sure, I think ideally, yes. I think they could be put in parallel. And I think it's such a new concept, we'd have to see how it goes and whether you ultimately factor it. But I think they'll almost be parallel. The way I see it is, you know, you see the stock exchange screens and you have green and red just now, but what would be when it goes up, down, whatever, I think then there'll be another one in, which is the impact valuation color. So we can choose a color and that will always be the impact that is there.
Yeah, no, I think it's a phenomenal idea, phenomenal idea.
You know, so just imagine the screen being different. Yeah. And maybe, I don't know whether it will happen in my lifetime, but maybe in a few years it will become an integral part of the stock price and the financial price. But I think that will take a longer system to change.
That's the goal. That's the goal.
Yeah. Yeah.
Thank you.
Thank you.
Over to you, Steve. Sorry.
Oh, thank you for pointing out. I missed Patrick's hand raised. Thank you, Jeroen. Tomas, next steps.
From a practical point of view, we need to be authorized by the regulator, which in the UK is the Financial Conduct Authority. And we're starting that process now. We expect to be authorized by the end of this year, which means that we'll be able to open a live market in the spring. So if you're interested, or you know people that might be interested in being the first cohort, which we think will generate a lot of publicity, then they should start working on their theory of change. And we're happy to share our theory of change and some templates and assist them in thinking about whether they would meet our tests. But as I said, our most important test is that you can demonstrate that you're operating a business model for the advantage of a beneficiary group and achieving impact in a measurable way that you're prepared to report publicly.
Thank you so much. Thank you so much, Jeroen. Wonderful conversation. I'm so excited about this. We really have a chance for high leverage impact. So let's keep involved in this conversation. If you'd like to be on an email about updates in this, or to join the financing subgroup of working with Catalyst 2030 on this, please write to Johnny Norton. I put his email in there.